All right. First of all, this is the first time we're meeting, so everybody knows. And I saw your fundraise announcement and immediately just jumped into an interview invite. So, first of all, thanks for doing this.
You bet. I'm all about it.
And I love raises that are built on top of communities because to me, it creates an accessibility path, right? Like, not everybody starts out with money. Not everybody, is able to get funded to launch a company, but anybody can gather, right?
Mm,
And if gathering people can lead to getting funded, whether you're a startup or a fund or whatever, that to me is a more accessible path for a wider amount of people. So that's why I'm very curious about your path. And so just to start off, so everybody has context about who you are and your fund and your community, what's your, like, how do you give your bio? Because you, um, are a community leader and an investor. So tell me, like, the quick, 2-minute bio.
yeah. Depends on how formal I want to be, right? But I usually just say, hey, I'm Sophie. I write a newsletter and I partner with early stage companies to help them grow. But if we want to wind that back a little bit, the newsletter is called Climate Tech VC, and we go by the not excellent, to be totally honest, abbreviation of CTVC, not to be confused with CCTV, I suppose. And CTVC is a publication that myself and my co-founder started back in early COVID. So we've been writing for about 6 years at this point, and we focus on exactly what it says on the label. So we focus on the climate tech space, how to define that, right? What are all the subsectors and technology areas and people building interesting things in it? It's sometimes difficult to kind of define the edge or the scope of that space because it can quickly merge into just general tech or all over the place. And then likewise, we found that the venture capital part, so the second part of that name also became non-obvious in some ways to define as these climate tech companies built increasingly sophisticated capital stacks. So everything from grants and how do you get started through to how do you exit and how do you scale it. So infrastructure funding, joint ventures of all sorts of different kinds, etc. So those are the two things we do. We've kind of defined climate tech, defined the capital stack, and that leads us to write very nerdy teardowns around markets, around capitalization strategies, around what does funding look like in this broader space? Where's it going? Who's doing it? What's kind of performance of different funds? How do they stack up against one another, et cetera, et cetera. And so by focusing on, you're getting, I guess, the accidental full pitch now, but I'm clearly still jazzed about CTVC so many years. And the crux that we realized early on would differentiate us when there were many, many other people penning articles about the burgeoning kind of climate space was that by tracking every transaction, so every deal, that would have a real bench of hard truth to fall back on, and that would really reinforce and we could reference it over time. And that side of the newsletter has turned into its own business. So CTVC has spurred a data and market intelligence platform, which is called Sightline Climate. And my excellent co-founder, Kim, runs Sightline. We have about 30 full-time employees, and it's a very healthy business selling market intelligence insights into corporates and banks and government players, mostly who operate on kind of the latter side of the capital stack. And as that was all coming together, I had deal access and interest in specific companies in the climate space that I thought were going to break out or were most interesting to me. And so that's what, now with our venture hats on, we called like earned deal flow, right? It's like looks at the people that are going to go build awesome things. And we were chatting about how did I do it running a previous company called Kula Bio that I'm glad to share more about. But in short, deep tech business, we make a fertilizer using microbes, and we've raised about $70 million for that company. So that was how I learned what venture was, writing about it through the newsletter. So therefore the founders thought that I'd maybe have perspective on what to avoid doing and then who to go partner with. And it turned out I did have perspective on that. And I didn't have a lot of money, but I got the access and I have the kind of structure and perspective. And so I started raising these individual deal
Like SPVs?
pockets, I guess, which we call SPVs, but I didn't know what an SPV was. So I spent a lot of time matching up interesting capital and then awesome deals. And so I did that a few dozen times, which is a real pain in the butt. Right? It's just like a lot of things to track because, of course, it's not just you're not just one and done. Like these are relationships you're in for 10 years. And so it's just like a lot of bits and pieces, but then also it's quite tricky to line up the timing, right? Of like get access to often quite fast moving popular deals and then also go raise from the LPs or the investors in it. It's tough to match up. And so I didn't want to this was a time where it was quite popular to go start a fund. And I think I'm like allergic to anything that's popular. I was like, gosh, I see all the holes in this, how this feels
It's a
more like a
terrible idea.
fad. And when I commit to something, I like really, really commit to it. And I like to run many kind of concurrent experiments or have lots of threads going at any time. But my like few core things are like very long term in nature, and it's important to me that everything compounds off of one another. I was not just going to jump in, flash in the pan like it was a shiny thing to go start a venture fund. And also, I think I had appropriate skepticism that was something that I could do well, like by myself for a bit.
And
I'm much more a
just so I
startup operator.
understand, just so I
Yeah,
understand the timeline,
yeah,
the company you ran for how long?
yeah. So I
The first day you
graduated.
were in your
Yeah,
business.
yeah. I graduated college. I went to school at Brown. I graduated in 2016. I'd started an ESG fund back when that still had materiality around that time, and written a book on sustainable investing. I was super deep on that more institutional side of the market. Did the Bain thing for a few years, left Bain, went and helped start this company. It was definitely not just me, right? So
Okay.
it's postdoc, a whole bunch of other people, but I was, you know, first person kind of in the seat. And that was, you got to keep me honest on this here. I think that was 2018 to
Mhm.
20, I don't know, that 20 maybe.
Yeah. So you're about two
And
years in before you started doing the newsletter.
I had stopped working on Kula Bio operationally by the time I was writing the
Right.
newsletter. So I'd left Boston, I'd moved to New York, COVID was happening, met Kim, my co-founder at CTVC, and we got started. But to the point of there being lots of concurrent threads, I wasn't just sitting around dilly-dallying and like writing a Substack newsletter. I was
Hey, I've been writing for a
consulting.
long time. That's hard. It's not dilly-dally. Writing's not easy.
Yeah, yeah. You know what I mean though. That wasn't gonna pay rent in New York. So I've been consulting on the side for a whole series of businesses. It was actually pretty interesting, and I've pulled a couple people out of Bain to build that business with me. But it was lucrative and it was intellectually interesting. That wasn't going to be kind of like the long term thread, and so that became a way to fund the very expensive habit of angel investing and doing all of these SPVs. So
And
that's specifically how all of that ties together.
how long into the writing and consulting before you wrote a check?
I literally just had my angel track record up because someone asked me now that we're thinking about future fundraisers. So let's see. I have this. Haha. I wrote my first check September 2020.
So maybe 9 months at best.
Yeah, yeah. And this is a team that I'd been involved with back at university, actually. So then I wrote my next one December 2020, and then I really picked up the pace. So then I did like a January, a February, a March, and April. Wow, I was like on a tear. But also that's like core 2021. You know
Right.
what I mean?
Yeah.
And so did, like I said, kind of like a few dozen SPVs there. Some of which have completely flopped. Luckily, not too many. And then some of which are just like ripped. So that's we've it's a nice little portfolio, but I never really built it as a portfolio. But of course, in retrospect, that's how you get evaluated, right?
So, and that's what I want to drill in on for a moment is the intentionality, because in hindsight, it fits together really well. And it's
Sure.
a model that we've seen in other, like, I think of like Brad Hargraves doing thesis driven, right? Where you've got content and an audience that has information that become a database, right?
Yeah.
Because there's matching involved. I don't know. Is he doing deals off of that? I'm not sure whether he's doing deals off of that, but there could be a natural, if you have all this data and you see that there are opportunities in the market, right? So it feels like sort of replicable model, and you had some investing experience in the past. So I'm curious how much of like you may have been pulled kicking and screaming into VC, but was it a thought? You clearly cared about the sector. You were at Bain where a bunch of people who are in consultants like go into venture, so you were at least probably peripherally aware of venture, private equity,
Yeah.
that sort of stuff. How much did you think that the content piece and the sharing your opinion and developing an opinion in the flywheel of, you know, asking good questions, getting good answers, having an opinion, repeat. How much did you think that might lead to investing? Or were you dead set against it when you started?
I wasn't dead set. I wasn't dead set against it. I just think I didn't quite have a model of someone that I wanted to be that was a VC. And I don't know if I even really do now, but I think that's fine. So I guess what I mean by that is more, it's not like I was an undergrad in college and was so inspired to grow into being a VC. It's never been a particularly attractive position in the market. Honestly, I see it more as a broker
Mm-hmm.
than an actual like builder creator. I see now how building the firm is very interesting because I feel like an entrepreneur who is also gets the privileged position of also deploying capital. And so it's phenomenal for the way that my brain works very laterally, usually most of the time. But I also really like having some kind of tangible pieces that I individually can own, particularly around like brand building and learning and all of those aspects. So like there's literally nothing else that I would want to be doing. This is the
Right.
perfect combination of all of my personal weird preferences and kind of like nuanced personality aspects. I really like the learning in public and I'm like addicted to the get taught something and question it and go really deep but then tie it back up. And so I love seeing all the data points like on the board, versus in the operator seat, which really I wasn't in that for too long at Kula, right? Like my preferred role was like enabling other people to do their best work as opposed to me running all of, I don't know, product or all of ops or whatnot. I don't prefer the kind of push the single pull up the hill. So the right thing about it, like of course there was a natural flywheel and I realized that was pretty addictive pretty quickly, right? Like you write something good, you press send on it, you get immediate engagement. The internet's amazing.
Mm-hmm.
There's also no excuses, right? Like you're and also you're only I strongly believe you're only as good as your last piece that you published.
Right.
And so there was no like I don't know if you remember that 2020, 2021 kind of like time where it felt like some people wrote amazing bangers of Substack articles and I'd like read it 10 times over and I was like, wow, I really can't wait for this person to publish their next thing. And they like never
Never
did. And so it's this there's no shortcuts. If you found one, let me know. But I think it's like consistency and quality. And I think we like ran everybody else off the treadmill that was doing something pretty similar because I could have named 10 to 15 other very similar publications when we got started. It's not like it was a great idea or super greenfield. I think we just executed quite well and earned the right and earned the trust and then built the product around it and then had all of the hard conversations around incentive alignment and ownership and how do the pieces fit together appropriately given that we're all on different timelines, right? Like CTDC is on a different timeline than Sightline, the data platform, than Planeteer and all of our portfolio companies. So we like know what that's going to look like today, tomorrow, 5 years, 10 years down the line. So it's just structuring that, doing the hard work up front when you've got something that actually works. And then I really believe in like running a whole set of different experiments in real time with like, 20% of your time. Otherwise you should just get lapped. Everything moves so quickly.
You mentioned that it wasn't like you spend your undergrad years inspired by VCs. And as someone who did VC for 20 years, I have to admit I look a little bit askew at anybody says that they were inspired by venture capitalists because I really don't find us to be a particularly inspiring bunch. I certainly get a lot more inspiration from the founders. I want to ask a little bit about the confidence to share. And you described it as a model that I call being a public student.
Mm,
You like the learning that comes from putting something out there, and you thought of your role as a founder as supporting other people to do their best work. And it's curious to me. So I also on the side, I teach a sort of thought leadership cohort, and the number one thing that people have to get over the hurdle of is putting themselves out there. The who would want to listen to what I have to say,
mhm.
the imposter syndrome kind of thing. Did you at any time like experience that feeling of like, who am I to share, like
Mhm.
before you put something out?
Of course. Of course. But that's
But why didn't it stop you?
everyone is so self-involved that ultimately they don't care about you. Like you think that other people care so much about what you do. No one cares unless it's really, really good or really, really bad. And even then, they move on right away. So,
You go
you know,
from, is everybody going to hate this, to why did anybody comment on this? Very
totally,
quickly.
totally. Yeah. I mean, we live in like a outrage attention economy. Like you writing a mediocre blog post literally does not even a blip, not even a blip. No one cares. So, and there's ways of getting around that, right? So, like, yes, of course, yes, I felt that. I think I kind of like done the harder thing before as well by like writing a book is a physical thing and you can't edit it afterwards and it's like it sits on a shelf. That was hard to kind of get to the final version of that, but I did that with someone that's a prolific author and he just kind of pulled me along. And so he was a great mentor in that and he was actually the person that connected Kim and myself together, Kim, my co-founder at CTV. I also everybody has their own kind of like hiccups or hang-ups in their head that's the voice of you can't do that. I had a really amazing English, I don't know, teacher way back when, and she'd get out this green pen, and I'd have like nightmares about this green pen, and I got my papers back and it'd just be covered in green ink, and like it felt like there's nothing I could do about it. That was like love in some ways, right? Like that she cared to do that is insane. And so now I crave that. And it's eerie and it's weird when you don't get the equivalent engagement. And
Because
so I can, pardon?
it makes your writing better.
Well, hell yeah. Also, again, in the attention economy, just having someone like truly engage with you to help you improve is amazing. And so I like actually do really love the comments and the engagement and people like calling me out on stuff. And the fact that it's very real time is awesome. So I kind of quickly got over that. I found my voice. It's not just all negative chatter too. Like people are excited about it. And that gave me confidence to like really lean into our like voice and develop that a lot and be like unabashed in it. It was also helpful that we chose to write as a unified front, not put our names on it, and to lead with the brand of like the CTVC brand. And I think that was a really good call because Kim and I were nobodies, like there were other well-known climate VCs and well-known climate authors and journalists, many of whom who've like gone into very different positions at this point, to be totally honest. But we led with the CTDC brand and like we hid ourselves for a long time behind it for like years. And then it
But
was just like right place, right time.
people knew that it was you, just not associating. You didn't have an author
Yeah,
line, but like you weren't like,
yeah, we weren't secretive,
yeah, right.
correct. But we just didn't I think generally people are like, it's just human nature to want to take credit and get the kudos directly yourselves. And we decided to boost the brand first, which allowed us to bring other people onto the platform. And we had and have a whole series of amazing fellows and interns and chiefs of staff over time, all of whom bring like new lifeblood in and they get amazing outcomes from that as well because it's just the best access um, to onboard into the community, right? And so that like then challenges our ideas, and we have some like now we've got the voice pretty standardized. You can bring other people on and on and on and on, and I enjoy that a lot. I really think climate's unique in insofar as it's like very meritocratic, and so by having this like trusted voice that we all sit behind, no one really cares if you're 18 or you're a woman or you don't have an investing track record or any of those pieces. It's just like, is your stuff good? And our stuff's been good for a really long time. And now, we have the maturity and perspective that we can kind of come out from behind the brand a bit and build these other pieces onto the broader platform.
It's a little bit of the model of the way that people talk about something that they read in, Axios term sheet, CB Insights or whatever, where like even there are bylines, right? But I always sort of have to get reminded of like, wait, which author goes with which thing
100%.
in my inbox, right? I see the brand and the brand stands for a filtering of people, but there might be, somebody might be
Yep.
on vacation and I still get the same sort of,
Yep.
term sheet email or what have you. That makes a lot of sense. Do you think it's also helpful? Is climate by nature a hopeful industry? And so there's a little bit of positive, maybe a little bit more positivity than like, I don't know, defense tech.
Yes. And it's mercurial. In the era that we started the newsletter, it was hype and hope and speed and scale. we're on the other side now as well. And so for those who stick with it, which is like more than you'd think, you get the exact other side of the coin. So it's depressing and it's overwhelming and it's all encompassing and it's existential. And we're up against, a bunch of, in my opinion, kind of like weird Trump regulatory pieces that are just really distracting and hurtful and don't make any sense. So you got to be able to ride both sides of that and keep a pretty level head if you're going to stick in it for more than a 5-year cycle. So no doubt, and our readership also mirrored lots of that. I see there being kind of 4 different climate personas, 4 different personas for climate founders in the space, some of whom are more fair weather than others, and some are more impact oriented and some are more commercial and some are more technical, and over time you see that persona, that aggregate kind of average persona, wax and wane a little bit. So yeah, so that's what I mean by the like yes and no. And I try to keep a like very macro, very level-headed, very like fundamental truths perspective through all of this. And that's not to say that I'm like the most weathered climate person out there, but I this has this broader sector and this broader trend of how do you make money while managing like climate risks, opportunity, and like downside has been literally all I've ever used as a thesis to evaluate kind of the world and markets and landscapes. I don't know, I feel like I've been watching this for quite some time, and uh, it's not going away. Right? It's just like fundamental science. At the end of the day, you can call it whatever you want, and you can live through whatever regulatory kind of cycle that we're in. But I think that helps for the early stage climate VC perspective as well. I'm just natively never going to hop on anything that looks like a fad or kind of, we don't do a lot of consumer stuff, like as a result, because I'm writing something for 10 years, not for like 10 months,
Right.
like we just inherently don't do anything that's a regulatory arbitrage, again, because of the timeline. Like I just can't underwrite something for long enough. You see a lot of interesting opportunities there. It's just like not what we tend to go for. So fundamentally, like now putting my Planeteer hat on of what specifically do we think is interesting from an investable perspective in the market, because climate's huge. It's a theme, not an industry. I like to invest predominantly off of that perspective of long-term climate risk and exposure. So that leads to a lot of like fintech plays, hardware-enabled software, novel data gathering, kind of multi-revenue models, right? So you often have to work pretty hard to get to a point where you can like really turn on the network like flywheel. And it's tough in climate to defend up. Like most of the markets are interesting because they're really big commodity markets, but
Right.
that also means that you just can't really defend margin. And so I like to find the things like right in the middle of like huge markets, but defensible margin. And that often means you have to monetize in kind of like multiple different ways. So very interdisciplinary, sometimes hard to kind of describe the piece that gets you out of bed at night, but it's often founders that have been like building a product inside industry and realize that they need to spin out and can kind of carve out and defend something and then sell it back in. That's like one traditional profile. And then the other is just people that have built really big stuff really fast before and can go like head on with something that's disruptive or has like a real why now. So we tend to sit across those 2 sides of the founder persona.
So I want to ask you a little bit about the building up of the audience and managing all these different aspects before I go into raising a sort of more institutional fund. So is it a newsletter with an audience, or do you consider it a community?
Great question. We have this discussion all the time. Again, I'm like my own worst critic. It's most likely a newsletter with an audience. There are many, like maybe even a majority, that would argue the other side, but like I'll be the critic and say that it would kind of fall apart if it were not for the content.
Sure.
It's not ready to kind of stand alone. We've purposefully not leaned into the other channels. It would have been so easy to do a podcast or do a whole bunch of events and programming and all of those pieces, but we like keep it real tight. So it's much more like an enabling layer that helps guide other people. And so like therefore it's kind of a community, but it's not a traditional one.
Gotcha. And is that because events is a shitty, hard business, or is it just a matter of just focusing?
No, I think events are actually pretty lucrative. And we do events. We just do a few of them and we try to do them quite well and big. So you'll see us doing a couple more per year. Right now, it kind of clusters annually around core climate weeks. If you know that concept, just like city
Mhm.
by city. Yeah, stay tuned for kind of more there. It didn't it didn't make sense for us to just do that from like a social perspective, and we do not monetize the newsletter, right? So it's not like we had a particular reason that we needed to, like, our subscribers get a lot of value already. So now the community that we're servicing is much more the customers of Sightline, the data platform, which is just like one component of the broader CTBC community. And it also happens to overlap in a Venn diagram with Planeteer's community as well, which has, other constituents in addition.
Given your the high bar you keep for yourself, and you saying you're your own worst critic, maybe this will be a hard question, but how would you rate the quality and efficiency of your CRM stack? And you've got newsletter people and deals and
Yeah.
customers, and they probably show up across things. And, I don't really feel like the answers there are easy, but I'm curious what you have learned in trying to figure that out.
Isn't it funny how like the CRM is like always the holy grail, like every tech cycle, like who's gonna crack the CRM?
Well, the biggest issue, as I see it, is that CRMs were built for sales,
Mhm.
and not everybody, like, you only sell something to a tiny minority of all of the people that you know. And you're not trying to put everybody in a funnel.
Yeah.
So to, jerry rig HubSpot or name your thing into that is a huge pain in the ass. I mean, I'm going through that now with like inviting people to a dinner and trying to track RSVPs and
Mm.
using a literal sales pipeline with statuses of like
Mhm.
invited, wants to come to the next one, and it's like a sales pipeline. I don't know what the
I
monetary
have
value of wants to come to the next one is, but I have a
Oh
feeling.
my gosh. Okay, same. I'm looking at my tabs. I have one, two, three, four, five, six, seven, 8 different tabs open for equivalent pipelines for different community things where I'm tracking essentially RSVPs or like touch points across
What
it. So,
what is it in? What are you using?
pardon?
What system are you using?
I haven't cracked the code on this. We're actually going to hire someone over at Planeteer who's like a AI native product oriented person, which I see as the core next generation ops fund. So I don't have a holy grail. I mean, I've got Affinity, I've got freaking Luma and whatever, all the other ones, and then just a ton of Google Sheets, and it's just our normal tech stack. I don't know.
That,
And then of course we transitioned from Substack to Ghost a long time ago for CTBC. So it sits across a whole bunch of pieces. I actually find like all of the AI tools on top of email are the most practical. Got a bunch of zaps and integrations, and as you would expect, all of the normal AI tools, which I use a crazy amount, by the way. Like, it's imperfect, it's not all perfectly pulled, stitched together efficiently. It still requires like me to do a bunch of prompting as opposed to it all being automated. But just put it in context. Like, I love to work, I work a lot, I choose to work a lot, whatever. But I haven't felt the need to hire another like investor or person onto the Planeteer team for the past 18 months because I keep getting efficiency out of these tools. And that's like, I'm ready to hire someone. Like, the budget works, like there's a ton of work to do. We're not slowing down. Just I have a whole list of things that I would have had different roles do that week, and I check it at the end of the week and I just cross it off because I've got a new tool doing it for me. So I feel like the next person I need to bring on board is someone to orchestrate the tools and then build like net new things that I wouldn't have figured out how to prompt it to on the back of it. We also have a privileged position of sitting on top of this massive data lake, right?
well,
So
that's a big thing, right? Like, that's all of the things, all of the benefits from that audience, from the data, is effectively what other VC firms hire people to go and source manually, sort of
yeah.
in ways, right? So you may not have another person, but you are not under resourced in the sense of like, and you have other people in these other businesses, right? Or you have somebody working on, you have a whole slew of people working on content. I could very easily redesign the Planeteer website to include everyone who has ever written for you as an advisor, right? Or everyone who works on the data platform as a ops team, and there's some VC firms that do this, right? Like, Your firm is either 1 or
Yep.
300, right? Like it's all of this.
Totally. Totally. Yes. Yep. And again, back to the point that we said like very early on in this conversation, it's like my role is really to be a broker and to like move and orchestrate all of those different pieces, right? Like the true creation stuff that I'm doing is content, I suppose. Like, and then it's the boutique deep relationships with the like concentrated set of founders that we go really that were essentially a part of their team.
So now I'm curious about the transition to a fund. At some point, you're managing all of these one off legal entities. You've got a spreadsheet in there somewhere that makes sure that all of your CSC payments are done for all of your various, things. Or I don't know if you're using any off the shelf tools for any of these SPVs. But as you said, it's a pain in the ass, right? And at some point, doing a fund becomes more efficient. And I'm curious about that moment where you're like, okay, I should do a fund. There's a decent story here. Who's that first call? Because I'm curious whether your
Mhm.
experience of the content and your relationships turned up anybody that would be a source of capital for that fund, or did you effectively have to start from scratch to find LPs?
Both. So
Okay.
the folks that were showing up that wanted a community driven fund, so essentially the people that wanted a CTVC fund, I said no to all of them.
So some people came to you and said,
To me and Kim, right? So
yeah,
to me and my co-founder, who was an investor, like she was
right,
the one that was actually in the investing seat,
right.
and so she chose or like prioritized building the product and being a CEO, and I wanted to prioritize building the firm and being an investor. So we almost kind of crisscrossed, and we're super close. We still work
Mhm.
hand in hand on all of these things. But the concept of a CTVC fund just like wasn't it. It was going to mess up and bias the edge that we had on the content side. It
Mhm.
was clearly going to be very like point in time. It would have had to be structured as essentially like an index of all of the companies in the space. There were competitors that were kind of doing that product
Right,
already, and it just wasn't something that was interesting to me.
right. Were they traditional LPs or sort of random stakeholders?
A couple traditional ones in there, and but then it was mostly excited individuals. Again, this is 2021, 2020,
Right.
whatever time frame. So it's a bunch of uh tech rich people that were excited about that stuff and having an impact and all of that jazz, which was like not how I wanted to build a business. I had two assumptions. One, I thought that I didn't originally want to do this alone. And I don't talk about this much actually, because I haven't thought about it in a while, but I spent almost 2 years actively looking like co-founder dating. And I so proud of myself. I've never said this, but like I'm so proud of myself for not
Not settling.
settling. Yeah, good word. Yeah, not settling. And there were some really obvious like there were ones where it was like, oh, you should go do that, like and like the LPs were ready to go. And it wasn't going to be right for all sorts of again like the incentives really matter. They're like super long termist incentives. It's not raising the fund, like it's working together for 10 years. And don't get me wrong, there's people I'm not along the way kind of from those relationships that have since become really awesome partners just in different ways. And one super 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 special person who became an anchor in the fund and who's kind of like one of my closest thought partners. And he's amazing. And I hope, at some point, I'm sure we'll just continue to bring our structures closer and closer together. But it totally made sense to go start individually. Assumption one was not to do it alone. And I just, dispelled that one over time, in part by assumption two was I didn't want to do this unless we had like institutional long-termist LPs. And so again, just being candid or vulnerable or whatever the kids say these days. For me, that was a little bit of I wanted someone else to tell me that I was good at I was
Mhm.
and the competitive part of could I get the hardest money? And that would give me the confidence, yada yada yada. And so I think that was the wrong motivation, but the right action set. And also easy enough to say that because we succeeded in getting those types of partners.
Right.
So
It's actually a good challenge for people that,
yeah,
because there are a lot of people who get stuck not being able to level up. And
boom,
what people don't realize is you don't have a lot of time before that individual investor money runs out.
100%.
right? So you do fund one, maybe you get away with fund two with those people, but most
Yeah.
individuals can't write three checks.
Yeah.
And,
Yeah.
listen, maybe you get lucky, maybe you have some write-ups, all of that sort of stuff, but statistically, you're not getting exits in the first 4 years. And without those kinds of exits, it's hard based on track record alone to get an institutional to show up. So if they're not going to back you for fund one,
Totally.
you got to wonder whether they're going to be around for fund three.
Also thought a bit about the value of my time, today is hypothetically the least valuable it will be if I'm doing a good job in the future. And so I was like, damn, well, I technically have the least on my plate right now. It's not like I have 60 portfolio companies that I'm maintaining and a whole team. I should invest a lot in fundraising up front so that I find those sticky partners for the long term so that hypothetically fund two, three, four, etc. is easier to raise versus kind of like cutting some corners. I hate cutting corners. And so that was part of it too. And I haven't done it yet, but like knock on wood, it feels like that's really gonna pay off. But huge expense up front. I essentially spent 2 years pitching or just like trying to get in front of like any institutional looking LP, starting from complete scratch, right? Like I literally didn't know what an LP was. That said, like I had a relationship with university endowment because I'd worked inside of it as an intern and knew those folks as individuals, and they'd known me since I was really, really young, and they'd watched me not because they thought it was going to turn into anything interesting, but just because we were close.
You were not a stranger.
I was not a stranger, yeah. And so some of those people, not just at my alma mater, but at other schools where I'd help kind of spread that ESG concept and help set up a whole bunch of different programs. And I have been quite deep in this ESG space, and so I got exposure to. I just didn't know. I just never knew I was ever going to pitch them anything. It's like
Mhm.
I was just genuinely interested in how they were running their operations from a ESG like management perspective, more for the upside, not for the downside kind of risk protection piece, by the way. And so I got to know these really big financial institutions. Then when Planeteer was a concept, I could take it to them really early, and they were all like, we're never going to do this, but you might know someone else. And then I go win someone else, and then I come back to them a year later, and then I close them as well. So net, crazy fundraising sprint. Like I would do it way more efficiently now, but it's like all about those super long-term relationships. And I think that's for young folks, or if I could go back and talk to myself again, I knew this, but I just didn't know like how significant it was. But your reputation lost for forever, and goofy thing of it's how you make people feel, and make them want give them things back so they want to support you, so that like if they give you some time, then you go help a whole bunch of other people, which makes them look 10x more effective. All of those little pieces of like really investing in network and relationships over time, not because you needed something from them, but because you're contributing back, um like were by far our biggest breaks with raising. Yeah, it's a pretty hard thing to underwrite. It's like I'm not a spin out, so I don't have a track record. It's in a space that was really hot when I was pitching it, but had been historically incredibly underperformant. A reasonably good size, like first fund, solo GP structure, so there's no real like bounds on it. And
Mhm.
then just fundamentally, it's like venture blind pool. That's tough. And so the only product you've really got is like,
Well, you had other products. It's not just you, it's you and a following, it's
yeah,
you data, and you say no track record. And I'd be curious and share as much as you feel comfortable with. You had been doing deals. Some may have looked good. Exits or no? No.
but nice paper, things that I'd be never say never, but I'd be surprised if they didn't generate actual DPI at this point. So
And,
yeah.
and
Yes, I know. And I'm being like purposefully,
a couple of dozen,
pardon?
a couple of dozen deals, enough to get a sense of the types of things that you're looking for. And
Sure.
everything you were saying about those long-term relationships remind me of Ali Hamed, who's one of the best sort of capital raisers I know. In an interview that I did with him, said you started raising your fund in high school, you just didn't know it. And
It's a
it's
good phrase. I agree with that.
relationships over time, not asking anybody for anything, trying to contribute value, staying in touch. It's actually my biggest career regret, and the tools are much easier now, is that being connected to capital early and not maintaining relationships with the people that I felt like shared
Mhm.
value or doing it. I started out my career on the institutional limited partner side, and I would meet all the folks from PE funds and buyout funds and the Blackstones and Apollos and Carlyles and what have you, but I didn't want to be a buyout person. So I never stayed in touch with any of those people.
Mm.
Some of those people were very likable. Not all of them, but relationship building over time and the ability to say to someone, hey, I'm doing this now, and have them answer, of course you are. You've been passionate about this whole time. I'm excited to either back you or make intros or
Mm.
whatever. Like, I think that's something that they definitely don't teach college kids to do, but they should.
And I had to get, I'm British. I'm kind of secretly British, right? Like maybe you can hear it on some of my words, but I grew up like culturally very British, which means at least the way that it manifested for the way I grew up meant a lot of uh do it yourself, like you don't earn it unless you had like suffered blood, sweat, and tears to make it happen. Very, very entrepreneurial kind of like very insular, etc. And so the idea of like asking anybody for something was like anathema. Like you just don't do that. You do it yourself, right? And then you like make people look good along the way. And so this piece of like bringing people along for the journey and making the right asks that don't have to feel like they're ways to contribute, I suppose. I really had to
You're
wrap my head around
legitimately
that.
offering them an opportunity.
100%.
You
And
have
that
to
was
feel like that.
so difficult. So difficult. It's still so difficult for me. So hard. But you like really have to believe. You got to get over that and like make the ask, make the introduction to the opportunity, whatever you think. I
It's
wish
interesting.
I'd been a bit like a bit more comfortable. It's not even confident because I really do believe in everything that I'm working on, but just like more comfortable with um um yeah, like sharing ways for people to like directly contribute to the things that I was building earlier.
And you got to be comfortable that you've done the homework.
Yeah, which I definitely.
The requisite amount of work has got into knowing this.
Yeah.
It's interesting, as I think the same thing happens with founders who are successful at fundraising. I do this series called How I Raised, and we've asked panels of people who have raised Series A firms, raised Series A rounds. And I was actually like a little bit surprised about this, but now that I've done it enough times, I'm not anymore. I asked everybody, when you set out to raise your Series A, what chances would you have given yourself of actually raising an A? And I said, well, I imagine you were all confident that you had built something, that you would raise something, right? Because you're pretty obvious if literally you went out to market and you struck out. Like you'd probably know you weren't in that position. But were you confident that you could get to an A? And across the board, everyone says they were 100%
Mm,
confident. And not just because of blind confidence, but
mm,
because they had done the work
mm,
to know where the market was, to know what they had accomplished, to be
mm.
in touch with the market enough and in the flow of information to know
Yep.
like someone should back this. This is where it needs to be.
I feel that I say this with, the appropriate kind of like hubris. Like, I feel 100% confidence on raising fund two because we've already like done the work on fund one and it's looking really good. But raising fund one, not, I was not fully confident on it until like midway through. And then it really flipped. The way I pitched like early fund one was so much like showing my homework. Like again, I didn't have any examples of anyone doing this before. So I built decks the way that I thought you built decks for company pitches and the way I've done it for kind of like more institutional stuff. And so it's like really rich and it has hundreds of links to like proof points of like things that I've written about before or deals that I've done or like real data points. The amount of time that people spend in that deck is like zero. So it's like more me just doing my homework to get my own confidence and then would follow up with like tons of examples and like a super robust data room. At a certain point, it's like clearly not resonating. And like I'm glad I did that for my own confidence building. And then you learn to tighten it up and to like, fit the needs of what those individual customers on the other side are looking for and whatnot. So yes, I think it's like
What did you switch into? How would you describe the second half pitching that was more successful?
LPs are not all created equal, nor are they all looking for the same thing. So it was much more tailored to what I perceive they wanted from our product. For example, if it's just like straight up returns, don't care what you're after or how you're structured or whatever, it's just like pure give me the number, right? Like I can get you there. If it's on the far other side of the spectrum, we actually didn't take any of this capital, but it's like just straight impacty kind of stuff. Like, let me help you get there. I want to learn alongside returns, right? And like feel involved in like a community, or I want strategic outcomes for my own portfolio. I want deal flow, like just really nail in on what folks are looking for because our LPs are everyone from international family offices through to foundations, through to universities, through to corporates, etc. So tightening it up and not treating it as one customer, and then feeding them just like the specific documents or tighter versions or just bullet points at the end of the day to align with that. So nothing groundbreaking, but just like not treating it as one homogenous thing, and then like actually following up because I would hate if a founder did this to me, right? Of just like give a really robust data room and a super thick deck, one conversation, and then just assumes you're going to do all of the work. Like that's not how it works in reality. So moving more into how I react best to founders who are constantly like feeding you and bringing you along in the journey and then like force you into a decision point and into a call and into an update and follow up with the things that you were looking for. So like running a proper mature IR process and realizing that not everyone's looking for the same thing and they've got other priorities in their day as well. So you've got to build the pressure point and force the momentum on it.
Last two quick questions because you have a lot going on and I don't want to take up too much time. One is, so you said you like to work, you work all the time. Do you have any concern about the sustainability of the workload over time?
Yeah, sure. I'm gonna have other stuff that shows up in my life that I want to prioritize. So I'm early 30s, like been together with my partner, fiance, or whatever, who literally works from the wall right next there. So you can probably hear him. I can hear everything he's saying right now. We just choose to spend a lot of time building our businesses at the moment. There's other stuff I want to build into my life in the future. I'd love to go build a family, right? And I teach a bunch of academic courses. I'd love to spend more time on that, and that's not directly related to Planeteer, right? So I'll build those things in over time. And just like with CTBC and Sightline and Planeteer kind of all flywheeling together and with other businesses I've built in the past, then you bring other folks in who have other competencies and you minimize the risk, etc. So I'm finding the right balance of that and when that needs to occur for what seems to be working quite well as like a solo GP structure, pre-seed and seed. Perhaps we bring other partners in to run different strategies on the platform that all benefit from the community and from the data layer, right? So that's one piece.
One suggestion I'll bring on the family side is my wife and I took a shared co-working space that we moved a desk out of and put a pack and play in, which was really, really great for a very limited period of time. And as soon as our daughter started getting more mobile, that space got very small in a very fast amount of time. And she would like bang on the glass doors with a toy. She was an inmate basically. And sort of everybody was like, okay, I don't think this is working anymore. But for a while, it worked really well.
I
So
love that. It's a great anecdote.
yeah, you might try that out. But the synergy aspect, I think, as a having been a solo VC, is
Yeah.
the synergy and repeatability, right? Is that you can't. I mean, we used to run neighborhood dinners, which somebody should definitely pick up on.
Mm.
Neighborhood by neighborhood, we'd split the cost of a host, and we split the cost of a chef, and the host would eat for free. And I had another VC come up to me and say, "Wait, how many dinners a year do you run? And like,
Right.
how big is your team?"
Right.
It took us X amount of time to run this one dinner. And I said, well, that was your problem, actually. You tried to
Yes.
run one dinner.
Right.
We try to run 12. And you run 12 very
Yep.
differently than you run one,
Yep.
right? And so
Agreed.
everything's got to be repeatable. You cut what takes too much time and
Totally.
you find ROIs for your time. The last question I have is about how um, you see VC having not come to it as a fan wanting to do it in a certain model, do you think what you have done so far and how you have built your firm, what do you think it means for how firms will grow in the future, especially as people talk about the mega funds, these large platforms, and all this sort of stuff? Like,
Yep.
what do you think it means for the future of VC?
Yeah, I think there's two paths, and you want to do everything you can to not get stuck in the middle. Because if you're stuck in the middle, you're dead and you don't even know it yet. And you're not going to go back towards, or very few will go back towards boutique. And so your only path is then to become a capital agglomerator. And that's really like, if you want to be a capital agglomerator, that's awesome. Like, good for you. That's hard and interesting and lucrative. And like, that's like running a proper big company. And there's customers, LPs, and founders that want that. Like, absolutely no knock. And sometimes we'll end up competing on stuff. That's just so not Sophie's vibe. I'm like, I like being having heavy agency and autonomy. I love the nimbleness. Like, I love the creativity aspect of it. Like, boutique is so my jam. I look at the world in a certain way, and I want to work with other people that kind of, challenge that, but also ultimately, like, we're thesis aligned. I want to work with as few very, very good people as I possibly can. And the rest, we can be friends, but like, I don't want to sit side by side with you every day. So I'm not
Oh,
the world's best manager. So, like, I'm going to be the best boutique, and maybe the boutiques grow by layering other boutique strategies under an umbrella, right? And then you like share top co economics or something like that. Like, I think that's a really interesting evolution, and something that now that we're in the spot where like fund one looks good, like starting to think about growth and whatnot. Of course, I'm ambitious. Like, I'd love to keep exploring those types of models and chatting with people thinking about that. But you're unlikely to see us try and do then you raise 100, then you raise 200, then you get stuck at like 300. What the heck is that return going to look like? I don't think that's a particularly contrarian take, but I firmly believe in the like bifurcation of the model.
awesome. Listen, thanks so much for all the time. I really appreciate it. This was
Oh,
great.
yeah.
Um, and good luck. And really excited to see what comes next.
I love that you do this. This is very much in the like one to many vibe. So thanks for promoting that. I'm glad that we did our first chat as a recording. And then we should team up on some of these community dinners. I love that vibe. And we're opening our new long-term lease office. This is super temporary. September 1st, and we've got a giant kitchen table and a huge deck. So I'd love to help host
Nice.
one of them.
Awesome. Got to lift a chef. I know all the good chefs are willing to do the group dinner. So
Yeah, awesome. All right, I'll holler. Cool.